So in terms of the S&P 500 last Tuesday, here, so we talk about potential test into this axis line. So that's the axis line where the previous support now become a resistance, and it just tested, have a reversal and a continuation to the downtrend. So fortunately, volume has been decreasing, so that's only the only good thing that I can look for, because these are still relatively impulsive downswing, and is acted as a test of this change of character bar. So this one momentum bearish bar is just way too strong with spike of the supply level, and this is just a test of this change of character bar. So we yet to see whether it's going to be a higher low test or a lower low test. But judging with this relatively high supply level, I'm still hopeful, or watch out for this zone. So it's probably going to test into this zone. So this is about 58.50 to about 59.20. So this is the zone that acts as a support, and we need to see whether we'll see a bounce up from here. Okay, and so far this bar really just changed everything. So we also discussed the uptrend is likely come to an end, at least going into a trading range, if not a reversal. So supply has been decreasing, and if we can get a test, whether it's high, low, 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 it doesn't really matter, and then bounce up from here, then it could really just form its own structure, and we are still relatively hopeful for a turnaround. It might just become a prolonged trading range. So instead of going up, down, so high, low structure, we might going into some choppy movement, and then eventually just form a structure before it resume the uptrend and forming another reaccumulation structure. Okay, so in terms of the supply level, supply has been decreasing, so that is relatively constructive, and also this is still a reaction, it's still unfolding. Right now, I'm still looking at this support zone. So if we could see a bounce up from here, then this is likely going to be a choppy movement or sideways movement. So it need to form its own structure. So the rest of them is just up to the individual setup. Right now, almost all the sectors are affected. Maybe let's quickly take a look at the sector. Let's check out individual sectors like, okay, start from XLK. So right now, I think the only strong sectors is probably XLK or XLC. So XLK is pretty much unaffected. We still have a high, low structure throughout. So as you can see it in this up channel, so high, low structure, or almost a high is sort of kept here. We don't really have a high breakout from here, but this is still a good structure. So XLK is holding up. So next one, XLRE, that is a weakness, a sign of weakness, breakdown. So that is a weak sector. XLC, communication, still relatively strong, uptrend, up channel, and it's probably going into, well, similar to S&P 500. We might see some choppy movements, sideways trading, but in terms of the whole structure, this uptrend is still pretty much intact. XLV is in a lower high, lower low structure, so downtrend, no doubt about that. In terms of energy, so XLE, that is ahead of this weakness, so continuously probably a month. So since November until now, so that's weakness. XLP, consumer, we also have this weakness show up. So the structure is sort of having this sideway, and that's a breakdown, inability to rally. So it doesn't look that good. So that's bearish. Utility, choppy, sideway movement, sign of weakness, inability to rally, weak rally. So that is also weakness. Finance, so not too bad in terms of overall structure, high, low throughout. There's an up channel, but that is a channel overbought, overthrow, and then normalized back to the other end. So this itself is probably considered as a weakness, but although this is still a high low and is testing this gap support, so this is probably also similar to the index. It might turn into a complex structure, forming another structure itself. So it could be a downsloping type or rounding or any type of a structure that you need to form. Industrial XLI, sign of weakness. By far, this is the largest down wave compared to this, or even this. So there's a reaccumulation. The uptrend likely come to an end. We have a change of character, indicating that uptrend is likely coming to an end, at least going into a consolidation. XLB, material. Weakness doesn't look bullish at all. Breakdown, big bearish bar. So that's bearish. XLY, consumer discretionary. So similar to the communication sector, we have a strong uptrend. One bar acted as a change of character and is likely going into form another structure. But supply has been decreasing is probably due to the holiday season. So we're still yet to see whether it will form its own structure formation. But so far, XLY, XLC, XLK, that's still relatively strong. So all related to like the technology stocks. Okay, I think that's pretty much it. And this is an equal weight, like RSPR, the S&P 500 equal weight real estate. So there's a breakdown. So doesn't look that great. Okay, maybe let's look at QE as well. That's the equal weight index. So equal weight index already shows some crack. So if we look at the Q should be a lot better. So same as the XLK, Q is a lot stronger, but QE, that's the equal weight index for NASDAQ 100, we already have the crack here. Okay, so it doesn't look that great. So it means that only selective stocks or the heavyweight stocks that are supporting the index. Okay, but right now is coming back to test this supports. Okay, so if it break down, then likely it's coming back to test the other end of the trading range. Okay, so maybe let's get back to the S&P 500. Right now, this is considered as a support level, so 58 or 5850, so to all the way into 5900. So I'm looking at this zone act as a support to see whether we'll have a bounce up from here. But if we're going to see a break below the supports, then it should really just trigger a shakeout and then to form even bigger trading range or choppy movement. So in terms of NASDAQ, there's probably by far a good looking chart here. So back to test the axis line, a change of character, another reaction, test of this change of character bar. So similar to the S&P 500, we need to see whether we'll get a bounce up from 2100 all the way to about 21400. So it's approaching the support level, and we need to see whether we'll get a strong bounce or just a weak demand. Okay, but judging at the market environment, the bullish setup versus a bearish setup, there are very limited bullish stocks. So only a handful of the stocks, although technically it's still tradable, and especially those that are showing setup at this point, because while the index is pulling back, there are stocks that are showing a lot of the strength, showing outperformance. So these are the stocks that we want to pay attention to. In terms of Russell, so Russell on the other hand doesn't look that great, mainly because this election bar is violated. So this is an important bar. So once this bar is violated, we could sort of anticipate that's prolonged trading range. Although I wouldn't say this whole accumulation structure is violated, but it's going to be choppy, similar to here. So there is a apex formation breakout, flagging formation, and suddenly have a failure. And that is the choppy movement from probably August, September, October, very choppy environment. And after that, we have yet another breakout showed up, election day, followed by failure. So this change of character bar on Wednesday is actually the failure bar. So 18 December, this is a failure bar. It just break and commit below this election bar and showing inability to rally. And look at the rally, is very weak, not even reach one half of this bar. So that already show weakness, and it's likely going to go back down. This is the immediate support 2200, and it's going to form its own structure. This is likely to be a complex structure. So Russell is quite a mess. So we have a trading range right here. If it breaks down, breaks below, then it might just come back down to chop around. Okay. Last one, the Dow Jones. In terms of Dow Jones, that shows weakness previously. So we already have weakness show up just probably 2 weeks before this change of character bar. Just break below this up channel. So the channel is broken, and now switch back to the other channel. So you can call this a normalization. So that's the original channel, and that is the other channel, and now break below. Now it's probably coming back to test 42,000. So 42,000 is aligned with the demand line of the up channel and also this horizontal line. Okay, so that's the axis line. So all the four major indices showing some weakness, is likely going to be choppy, at least choppy movement from here. So if we can get a bounce up from this minor support level 5850 or 5800 level, then it's looking still relatively bullish. We just need to pick the right stocks, but it's going to be challenging, because if the market is pulling back choppy with a high volatility, then it wouldn't be that easy, because a lot of the breakout stocks will tend to fail, and there should be quite a lot of the rotation, and especially some of the setups with a lot of the speculative movement. So just need to be careful on that. So one thing to do is just to do nothing and to stay sideline until the market is clearer, and wait until the volatility is settled down. Then it could be a much better move rather than just getting in and out, unless we have relatively decent setup.